Hi everyone. Today I quickly want to show you the jackpot on divergent. I call it jackpot because anytime you spot this particular strategy on any time frame, believe me, even if you borrowed money to trade that particular pair or volatility index, you are not going to lose. It's a jackpot, which means you cannot lose that trade. I'm going to show you a live chart now, but before then, let's quickly go through what I have for you. If you check my videos, I've discussed the divergent, more especially hidden divergent and regular divergent. So let me quickly show you the regular divergent. So here I'm going to talk about a short introduction of divergent, type of divergent, difference between the two divergent, then what is regular divergent and how to set it up, what I look for to trade a regular divergent. If I spot both divergent and regular divergent, what should I do? And number 8 is called jackpot. I call it jackpot. I have 2 jackpots. I'm going to explain one now, and in my next video I will explain the other jackpot. Believe me, once you spot this jackpot, you are going to win the trade. So trade it, you will surely win. Okay, let's go. The first one, what's the meaning of divergence? You know it before. Divergence can be seen by comparing the price action and the movement of an indicator. I've said this several times in my video. So let me quickly be scrolling down so that you can read it through. The other type of divergence, we have regular divergence and hidden divergence. And what is regular divergence? Regular divergence is used as possible sign for trend reversal. So there are 2 types of regular divergence, yes, which can be bullish regular divergent and bearish regular divergent. So you can go through that. So number 3, what are the difference between the two? As in the difference between the regular divergent and hidden divergent. So please, I want you to take note of the difference between those hidden divergent and regular divergent. Number 1, this for hidden divergent. Hidden divergent is a sign of trend continuation. I've said it in my video several times. When I'm talking of hidden divergent, it's a trend continuation, unlike regular divergent, which is a reversal. And reversal, this type of reversal, it may be just a pullback, or let me say, it may be a retracement. Because some people, if I say regular divergence it brings about reversal, they will think it is a total reversal. No, though it may be a total reversal, and sometimes it may be just a retracement. Then if you have another indicator, you can use it to confirm whether it is going to be a retracement or a total reversal. So if you go through it, you will see where I explain irregular divergence. So this is the regular divergence. It's a sign of trend reversal. You will see it there. So the idea is that the regular divergence show momentum leaving the trend. Yes, because when there is no momentum in the market again, it means the market is going to reverse. So I said it there. So this is how to draw it. Then they are in my videos. So then number 4, what is a regular divergence? Because I really want to treat regular divergence here. I said the regular divergence is used as possible sign for trend reversal. That is, in the trend, if you are expecting a total change of that trend or just retracement, you have to be expecting a regular divergence as well, because it occurs when the current trend has lost a momentum. And I told you, losing of momentum may not be a total reversal. It may be just a retracement. And some people do use a Fibonacci to check that retracement level. But if you don't know how to use retracement, then you can simply Fibonacci. You can simply use a stochastic to do that. So you are going to see it later in this video. Then setting up a regular divergence. In order to set up a regular divergence, you can use any oscillator indicator, be it MACD, RSI, CCI, TDI, or stochastic. So whichever one you use is mostly going to yield the same result. For this lecture, I will show you that of stochastic. You can check my YouTube channel to see, because I have used MACD as well as stochastic. I use a regular divergent of MACD, and I use stochastic for confirmation. I've done a video like that before. Then what I look for to trade a regular divergent. In order to trade a regular divergent, what I usually look for, depending on the condition of that market. Yes, because it may be a bullish channel, maybe it's a bullish channel, bearish channel, like that. So that's how we are going to know whether it is going to be a total reversal or just a retracement. So if you read it through, you are going to understand. So these are the examples of regular divergence. Can you see? Can you see the step index? See, so this is high low. Then this one, look at it. Look at the stochastic. Look at the way the stochastic. What happened? It went up. So that's one. Look at another one. This is another one. Look at the way I drew my my line on the step index. Look at the way I drew it on the stochastic. That's a regular divergence. It will surely come. Let's see another one. See a beautiful one in JBP, JPY. Can you see? It is not only occur in volatility. It occurs in current pair as well. Can you see JBP, JPY? Look at the way it happens. So once the spot does regular divergence, then it went up. Can you see? So this is another one. Look at this beautiful one on volatility index. This one just happened on Saturday. Look at the way it goes. Can you see? So look at another one on volatility 75. That's H4. Then look at another beautiful one, AUD card. So all these are example of regular divergence. Example of regular divergence. Look at the gold. Can you see the gold? Look at the beautiful regular divergence. Look at the way it comes down. So that's how to spot a regular divergence. Then, if I spot both regular divergence and hidden divergence together, it's possible you might spot those two together. In case if you do that, if you don't know how to trade it, I will advise you to leave it. But if you want to trade such, then you can simply go to the next time frame or the one below that time frame to see the condition. So most exactly, I used to check the next time frame. Probably maybe if I spot both on H1, so I check H4 to see the reaction, whether I'm going to see a divergence there or not, or to see the trend. So if it favors you, then you take a trade. Then if you don't, then you just leave it and let it go. So if you read it through, you see everything. Then this is the major thing I want you to understand, which is the reason why I'm making this video. It's called the jackpot. Jackpot on stochastic. What's the meaning of jackpot? This jackpot is this. You know we have divergence, and divergence is divided into two, which is regular divergence and hidden divergence. Then let's assume that you are in H1 and you are trading volatility 75 and you spot a regular divergence in that particular H1. You can go to H4 to see if there's going to be a regular divergence there. Mind you, you spotted a regular divergence in H1 and immediately you check H4, you saw the same thing. That is regular divergence. Believe me, that's jackpot for you. Trade it. You are going to get it. Let me show you an example. Let me show you an example here. Let me show you an example. I've done it here. Look at it. The same day, volatility 75 index. Can you see? Can you see? The same thing that happened. You know, this is a regular divergence on H1. Then on getting to H4, I saw the same thing, regular divergence. Believe me, it's going to come down. It's going to, that's jackpot for you. That's jackpot for you. Believe me, it's a jackpot. If you see the two regular divergent or the two hidden divergent, it's either you see the two regular divergent or the two hidden divergent in a consecutive time frame. Believe me, it's a jackpot for you. So let me quickly show you the trade I'm currently on to see the live trade of the jackpot. Okay, this is my MT5. This is my MT5. Can you see? Can you see? Boom 500. Can you see? I saw a regular divergence in H1. I saw a regular divergence. Sorry, a hidden divergence in H1. This is the hidden divergence. It's not a regular divergence. So this is the hidden divergence in H1. Then I quickly check my H4 to check. Sorry, I check. You know, there is a word hidden divergence here. So if you check H4, it's not there. But if you check 30 minutes, can you see another hidden divergence? You know, we have two hidden divergence. It will surely come. That's my current trade now. That's my current trade now. And I'm very sure of it. It will surely come. It will surely come. I can't show you my balance, but believe me, it will surely come. That's jackpot for you. Mind you, the setting for stochastic is 933. So let me take it to 1 minute time frame. Can you see? Can you see the beautiful? Look at the way I sell. In this trade now, I just sell with 0.5. I've gotten nothing less than $40. Imagine if you put a lot of position there, you are going to get more. So this is a live trading. Can you see? It's a live trading. So anytime, let me say it again, jackpot simply means if you spotted an hidden divergence in one time frame, be it you spotted an hidden divergence on 1 minute time frame, and you went to that of 5 minute time frame and you spotted another hidden divergence, that's jackpot for you. It will surely come. Another one, let's assume that you spot a hidden divergence in 15 minute time frame and you go to the 30 minute time frame, you spotted the same thing, hidden divergence, that's jackpot for you. It will surely come. Another one, let's assume that you spotted the regular divergence in 1 hour and you check 4 hours and you saw the regular divergence. It will surely come. Watch out for my second jackpot. Thank you.